So, you've probably heard people say, never buy a property in a company. But here's the truth. Buying properties through a company is not necessarily a bad move. The first thing when you think about buying a property in a company probably is no 50% capital gains discount. Yes, it is true, but it shouldn't be a deal breaker for everyone. If you want to find out why, please keep watching. Hi, my name is Eric Lee. I'm a chartered accountant with more than 15 years of experience, and I became a real estate agent to help people to build wealth, not just prepare tax returns like most accountants. With dual expertise, I help property investors in everything from setting up tax-effective investment strategies to acquiring high-performing properties. Unlike online gurus, I hold the highest standards as an accountant, helping people to avoid costly mistakes. So, if you want to learn about property investment, hit the subscribe button and stay tuned. Let's talk about positive sides first. If you buy properties in a company structure, there are a few benefits. Firstly, the asset protection. If you are running a business or have exposure to a legal risk, a company can help shield your personal assets. For example, if you are a builder who owns investment properties and something goes wrong with the job, keeping property in your personal name could put your home or other investments at risk. Secondly, the fixed tax rate. Unlike individuals who can be taxed at as high as 47%, including Medicare levy, company pays at 30% flat. For those of you thinking of 25% tax rate for companies, that is only for small business companies that are base rate entity. But in property investment context, it is safer to say tax rate is 30% rather than 25%. The third one is a bit technical, but you may already know. Franking credits. When companies pay tax, it is not just done and dusted like individual tax. Instead, it is recorded as a franking credit behind the scene. And the credits can be attached to the dividends, so shareholders will be able to claim this as a tax credit when they lodge their tax return. For example, if you made $100,000 capital gains and pay $30,000 tax in a company. Now, the company has $70,000 retained earning after tax, and you have full control over when and how much you want to pay dividend to yourself as a shareholder. This means you can pay yourself dividends when your income is lower or even after you retire with no income. So you will have a better use of the franking credits accumulated at 30%. Continue from the earlier example. If you decide to pay yourself all of the money in the company, which is $70,000, in the year that you had no income, you will receive $70,000 dividend with $30,000 franking credits attached. Based on today's tax rate, tax on $70,000 is $14,617, including Medicare levy. But because you have $30,000 franking credits, you will actually receive a refund of $5,033. Even with the use of franking credit benefit, you probably still need to pay a bit more tax in a company. But the actual difference may not be as big as you thought, depending on your situations. And like always, nothing is perfect and there are some downsides. Obviously, the first thing is the absence of 50% capital gains discount. Unlike a trust and individuals, companies don't get 50% capital gains discount even though you hold the properties for more than 12 months. And often, this incurs more taxes than individuals and trusts. Secondly, the companies require annual SEC fees, tax return, and preparation of financial statements and other compliance work. That's more paperwork and more accountant bills. Yes, that part benefits me though. And lastly, in some states like New South Wales, land tax thresholds don't apply to companies. So you need to be aware of different land tax rules of the states you are investing in. I'm not trying to say if a company is a good or bad structure to use as a property investor. I want to let you know that it may be not as bad as you thought, and it could benefit you in big time depending on your situation. So, if you are not sure or need professional advice on structuring your investment ownership in most tax effective and also achieving good level of asset protection, contact me using the details in the description below. If you found this video useful, hit that subscribe button because I regularly cover property investment tips with accountants and real estate agents' lens. Thanks for watching. I will see you in the next video. Bye for now.